we're going to feature this 460 put that was deep in the money, but not anymore. You know why? Because you got a super monster gap, bull gap on here, and it's going to take these prices all the way down. And what I'm hearing from one of our senior MMTs is we're putting nickel bids out. I'm going to be featuring those calls, the 450 call, which was $1.18 that expires today. We're going to see and there was 14,994. Now, granted, we blew up Apple, Mr. Cook delivered it. However, they're going to gap these up to the high, and we're going to see how some of these expirations play out. That was our game plan. We're going to be also looking at how that 455 put here is going to get marked down to nothing. I believe we have nickel bids. We're bidding a nickel here. Okay? Because if you take all that side of the market, you can't help. You can't really lose very much at a nickel, but that's where we're going to be lining those bids, just to have them lined. There's 3 days left on them. We're watching the Delta Gap reversals in play. So there are other ones that are going to gap up in super value too. We're going to be watching exactly where that 445 weekly call gaps to. These are all weeklies now. And you can see some of the volumes that were bought on the bull side here. We're also going to take a look and see where some of the exhaustion gaps happen to the call side of the market. What side would that be? Well, we're still going to take a look and see what the 445, 218, 445 call gaps up to. It got down here going into the earnings. They took the premiums from 8.5 down close to that 450 level. And we're going to monitor that there was 5,400 of them. We're going to see what kind of premiums that they actually give or take away in the derivative market based on a bull gap, and where premiums inflate in value again. So this is the preview on some of the option tree that we're looking at. We'll be looking at a 460 put that was marked up here to $41. That's a 218. That's where they close. We look at to see where they take all the premium out of this one. Set alarms starting at $12.50 on this put option 460. 460 put. What we look at here is how they take that premium down to record level lows. Okay? And what we're going to be doing is that because the rest of the indexes are gapping all down, we know it's a super gap. And super gaps that we did in pre-market already is how do we use this market here to get where this is all this money that was deep in the money is going to go away. And it's going to find a price range somewhere. And we're going to watch that premium get taken out. So I'm going to put that one there. And what I am going to do is I'm going to feature the 460 put. The 460 put that would take place for you, and how they take the premium out. But why can I make an entry and trade that premium for a profit? And I'm going to put this one right here, 460 put, right here. I'm going to put that up here. I'm also going to put this other 460 up here. That's the 218. That's today. And depending on where in the delta range is, we will be delta ranges, and we will have tops that will reverse. We will have deflated entries. We'll be on high alert for those. We know what the lower end of the price is, 449 and some change. Walking it up here, people are selling into it in here already in pre-market. Market opens up in 8 minutes. How to use derivatives and steal the prices and sell it back to the public at a higher price. They're going to take all the premium out of here. And we're lined. And I'm going to watch these opens, particularly the 460 right here. I'm not saying that it's a bad company. What I am saying is that there are trading ranges in them, and we're going to take advantage of it. How about that? Opening bell, 7 pennies.